Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here on this 6th day of March 2009 is a chart of the market. Boom, there it is. Chart of the mini S&P 500 futures did have the jobs report released today, showing an unemployment rate of 8.1%, highest level since 1983 at the of course, was right before 83 was right before a huge move over the next 4 years in the market. So, although we do expect to probably go in the double digits in terms of unemployment, as you can see by this market, certainly is we are closer to the bottom than we are to the top. We'll actually look at a daily chart of the market in a second, the S&P cash. Right now we're looking at the S&P 500 futures. 676.25 is the print. We're looking at our intraday dynamics. These are our proprietary indicators. This is Friday, March 6th, Thursday, Wednesday, Tuesday, Monday. Monday we did have a very nice sell-off. Friday we mentioned that just the market probably, this was last Friday, probably had no wherewithal to get higher. We did point to this bearishness, and some choppy bearishness around there, but certainly we were below the trend. We're below the low of the prior day, and bumping up against that close in the lower echelon of the day's range, actually near the low of the early session. So just a nice bearish formation was the case last Friday. We did get the lower open on Monday. Accelerating bearishness was the case, full bearishness, full throttle of bearishness actually for Monday, and you did see a drop from about 735, we'll call it, to around 700. So a nice 35-point move lower based on this bearish formation in the chart from a price technical trend following and certainly intraday dynamics. That was the case. Then we move into the next day, as being Wednesday. Start to see a bit of a divergence. Still fully bearishness there, bearish, but did see some divergence, suggesting the market wouldn't make too many inroads to the downside. We did break below the lower of the late session of the prior day. Here, tried to bottom out, bounced back, just a nice little trading range, closed again in the lower echelon of the day's trading range. Having said that, we did have a very strong divergence on that day compared to the day prior, suggesting that we would get at least a bottoming formation. We did get the bullish open higher, the gap higher after a low close the day prior, and we did have the support of the bulls. Bullish was the case on this day, of course, being Wednesday. And what do we get? We get a move to break and eclipse the high, double top high of the prior session. However, having said that, this market is just so volatile. Just so many moves taking place. It's just really a trader's market. Really not much to hold your hat on, as you can see with this move that was totally erased by the late session on Wednesday. So you really can't count on anything other than the bears are controlling the environment. That's one thing certainly you can count on, is the bears will always have the edge, even if you don't know where the market's going intraday. So what do we have? We had a complete erasure of those gains, closed back below the low of the session, the low of the prior day, or sorry, the higher of the prior day. Certainly was indicative of a move lower. We did get the move lower on the open on Thursday, and certainly was confirmed by bearish, decelerating bullishness, and accelerating bearishness. Here was the case. We'll call it a print of 700 in the ES, go on to print a low right around 675. Right now appears that low is trying to be held. We did get the errant, we'll call it, surge higher, yet another errant move, just getting a lot of whippy moves. Players really don't know where the market's going. They're trying to bottom it out, but again, the bears control the situation. We are bearish here. As you can see, this move was negated by bearishness here. No call there. Did have a bit of bullishness there. Not too impressive was the bullish case there. So we did have a move up to around 700 to retest that very round number in the S&Ps, and we've since come 25 points off of that intraday high this early session following the jobs report. So that's where the situation is. The bears do continue to control. We're going to go ahead and switch over and look at the chart of the daily chart of the market. This is the cash market, just continues to move lower. We jumped in way too early, having booked about 500 points on the downside, went short around 1390, closed our gains at around 990, I believe was the case. 990, if I'm not mistaken. I thought it was 890, but yeah, 890 actually was the close of our, and we actually went to bullish. We didn't just go to neutral. We did expect a snapback. However, we based for the next 4 months. And just have continued to trail lower, have now eclipsed the swing point low of the prior move to the downside, and we're just trailing lower. So as you can see, fully bearish is the case here. We actually went against all of our indications, which were full for continued bearishness. Had a little retest there. Great opportunity to get back in had we been bearish, but we decided to go ahead and switch to neutral. Where we made today, that should be a gray arrow to the downside. So neutral, weren't quite ready to go bearish again given the move, but certainly has been impressive with a move from 789 to 679. So a nice 100-point move in the last few days. We'll call it a month. So short-term bearish remains the case from a momentum perspective, trend following perspective, horizontal price perspective, price technical perspective, directional movement perspective. The bears continue to control the environment, as is the case. We're going to go ahead and switch over and look at the monthly. We're at 678. Wow, is that not impressive? That is extraordinarily impressive, has been the case. There's the big run up starting in 95, the big run up for 5 years, just very impressive. We did retrace that in the early 2000s, but who would have expected we get back to retest that low or that high? It certainly was the case, but it's just been completely erased given the double top formation of the market. But we're going to go ahead and zoom in to look and see where our next potential support is. Right now we're at 678. We've certainly eclipsed this low in 2003. Certainly have eclipsed that low. So we're looking at, here's the market print, 680. Nice little resistance was the case there. This is a monthly chart. Few months trying to get above the 680 level and then blasted right above it. So 680 is kind of an important level, kind of an impressive level. So we'll call it 640 and 680 is the support resistance zones that we're going to be looking for. But having said that, we have just broken that. Hopefully we can, this can be a dangling participle, if you will, and we can get right back up to the upside. But as it stands now on the daily chart, the bears do just simply control the market environment. Where have our portfolios been? Spend a lot of time on that. Where have our portfolios been? Here's a 9-day look. The dual day trader continues to outperform, is the leading portfolio with a gain of 38.6%. Certainly has been very choppy, but to be able to put up gains in this very extraordinarily whippy market is nonetheless impressive. The MAPDT original coming in at 30.8% over the last 9 days. 38.6% is the gain over the last 9 days for the dual day trader, and of course we're up around 500-600% still over the last several months. So actually that's right there, 458% for the dual day trader, 500 for the MAPDT over the last 110 days, 154 days, almost 600%, and roughly 600% for the MAPDT is the case. So still putting up very impressive gains and continuing to do so. Certainly over the last 9 days, putting up another 30-40% for these two portfolios. As is the case, you may still participate in the specials if you go to either the Dual Day Trader ES or the Dual Day Trader DS. You can, if you purchase 4 of these units, you can either run them consecutively or concurrently, and you purchase 4 of those and enter promo code Dual Day Trader. Just go ahead and apply that. You can save yourself $500, so you'll get a whole unit free. You can either run 4 consecutively at a time, or you can run them over a year. You can pay for just 3 quarters and get the 4th quarter free. MAPDT, same deal as last week. You can save $500. It's still a great time to get involved in these portfolios, as we've mentioned, given the recent drawdowns. MAPDT, enter promo code VIDEO, and you can save $500 on any version of the MAPDT. That's it. I hope you guys enjoyed it, and we will see you next time. If you have any questions, go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com. We'll see you next time.